Have you been looking for a project that doesn't rely on new investor money coming in order to pay out a passive income on a monthly basis? Well, in this video, we're going to be taking a look at WOLFER Finance and what they offer their community. So stay tuned and enjoy the video. Hey, what's going on, guys? It's Eric here and welcome back to the channel. I hope you guys are having a great day and are doing well. Today we're talking about WOLFER Finance, which is a brand new project. It's launching on the Matic Polygon network in a few days, but we are going to get into the specifics. But what has me the most excited about this project is the fact that there's no Ponzi-nomics, meaning it does not rely on new investors joining the project in order for them to make money. So if we take a look at the core values of this project, they say no coin, no chain, no DApp. We're going to get into that in a minute here. Then they say keep the capital secure. There's no coins. They're not investing in high risk coins. And then they say it's full transparency. And we also have monthly income that they are planning on distributing, as well as real assets, real investing, and basically true and tried income. So at this point, you're probably wondering, how in the world is this project going to make money if they're not relying on new investors coming in, and as well as how are they going to be paying me on a monthly basis? Now, this is where the NFTs come into play. Now, I wouldn't actually consider this an NFT project. The NFT is just the way that they're planning on using the blockchain in order to pay out this dividend on a monthly basis. So if we take a look at these NFTs, and these NFTs are selling for $500 worth of Matic, and the minting is starting on Friday, June 10th. If you are whitelisted, you can start minting these. And just a quick note on the whitelist, it is 80% full right now. So 80% of those 5,000 NFTs are already committed. But taking a look at those NFTs, there is obviously a different tier to these NFTs, which is purely randomized upon minting. Now, even if you have, let's say, the Alpha Wolf NFT or you get the Beta Wolf NFT, whichever of these NFTs you end up minting, you are still going to be getting the same monthly distribution regardless of the NFT you minted. Now, the only reason they have different tiered NFTs is because the Alpha Wolf NFT may actually have a say in the governance of this project. Again, it's not confirmed yet, but you do also have a few benefits if you do end up minting an Alpha Wolf NFT, meaning that you have access to pre-sales and whitelists and other benefits for these other NFTs. But basically, once you have your NFT, you are going to be getting that monthly income because they're going to be using the blockchain again on Polygon, taking a snapshot of all of the addresses that actually hold this NFT. And then depending on how much money they made on that said month, they are going to be distributing that revenue or that profit to these NFT holders. So this brings up the concept of their Wolfranomics, and as we understand it now, they have 5,000 NFTs, and each of these NFTs are worth $500, and that's going to be their initial capital to then go ahead and buy these different projects and nodes that they plan on investing in. And if we take a look at their plan, once they've invested that initial capital, we'll get into what exactly they plan on investing in. But once they have that initial capital invested in there, that's how they're going to be generating money. And then they plan on having a 50% distribution on a monthly basis to those WOLFER Finance NFT holders, which we just talked about. So to give you an example, let's say in 1 month, they make $50,000 in profits from these different strategies they're invested in. They're going to take 25,000 of that and then basically distribute that proportionally to all of these NFT holders. Then 45% of that 50,000 would be reinvested in these strategies to continue the compounding effect and continue generating even more revenue. And then 5% of that goes to the team and marketing. Now, something very important to note is that you can actually sell your NFT on the secondary market, which is awesome because you're not losing your initial $500 of investment. If you do decide to buy one of these NFTs, you can actually sell it at a later date, which is awesome. But of course, if the market doesn't do well, you may be actually selling your NFT as a loss. But again, it is nice that it's an NFT and it is transferable, meaning that you can sell it. Now, if we move on to the moment you've all been waiting for, how are they generating money and paying out their holders on a monthly basis? So as I said, they are going to be taking that initial capital and investing that in different projects, which are obviously true and tried, and they are going to be generating money through these projects. And as we can take a look here, they have different graphs, but what I want to bring your attention to is if we zoom in on these portfolio on year one, this is basically what they plan on investing in. So they do plan on investing about 16% of that initial capital into projects that offer 20% returns, then about 12% of the initial capital in projects that offer about 12% return, then 24% in projects that offer 10% return, and so on and so forth. But now the interesting part of this is that yes, initially on year one, your projects that you are investing in, or the amount of capital you're investing per different project class, is going to be different because you're probably trying to grow your treasury. Now, as the treasury grows, their plan is that they are going to remove those high yielding protocols, such as those 20% projects. They're going to get rid of those slowly but surely and move those into safer class projects. So as we can see here, year 5, we have only 3% of the entire treasury that's allocated to 20% return projects. And now we have a whopping 27%, which is now in 5% return projects, as well as 37% of the treasury investment in 10% returns. So obviously at this point, the portfolio becomes a lot more safe and it becomes much more sustainable because the treasury is invested in bigger and safer projects. And as we can see here, year 10, we have 79% of that entire treasury, which would be in 4% return projects. And to give you guys more clarity on which asset class are giving 4% all the way to 20% returns, here we have Drew, obviously the founder of this project. He says 4% yields are the FTM validators of the world. So basically validators, and you need validators on the blockchain in order to operate that blockchain. So that is probably the safest investment. But of course, that investment requires like hundreds of thousands of dollars. So your regular investor can't actually afford that, which is why this asset class and this treasury is eventually going to move all of its capital, or most of its capital, into validator nodes, making it even safer for people to get that passive income every month. Now we have the 10%ers, which are basically the yield nodes. I'm sure you guys have heard of that. Then the 12 to 16% would be the pocket nodes, and the 20% would come from the project dash diamonds, which are master nodes, which would give you about a 20% yield. So if we move on to their white paper, they have a whole lot of information on the project, on their goals, and how they plan on going about their different investments. I'm not going to go through everything because there is a lot of information, but I definitely do recommend you guys going through this and understanding how it works. But in a nutshell, what you need to understand is that this is basically like an NFT. You're investing $500 for one NFT. You have that NFT, and that NFT allows you to get those monthly yields and those monthly payouts, which are going to be in Matic. So that's what you need to understand. And how they generate this money is that they are taking that initial capital from the NFT sale and they're investing it in different asset class in order to generate a yield. And as the protocol continues to grow, they are obviously going to reallocate that and make it safer as we move in time. Now, as you guys know, when I do research on new projects, I like to understand who is the team behind it, are they KYC'd, and is there an audit for this protocol? Now, the first thing we see here is that on their business and team documentation tab, we have all of these articles because they've created an LLC for WOLFER Finance, meaning that they have all of their information online, and we have an address, we have who the founder is, we have all of these information that we would need in the case of, let's say, them taking all the money, which is obviously not the case because we have Drew Wolfer, which is himself. He's KYC'd because he's a fellow YouTuber as well. So we know who's behind this project, which is always reassuring. And this is basically Drew Wolfer with his team creating this project, which is awesome to see, and obviously a check mark in my book. So in terms of the audit, there isn't actually an audit because there's no coin, there's no DApp, and this is actually where the snapshot of the NFTs come into place every single month. There is a snapshot and the rewards are distributed based on who holds that NFT for that said month. So that's why there's no audit. And if we take a look at the distribution schedule, here we'll have where the distributions come into play. So in the month of June, if we had a distribution, it would be highlighted and then you would be paid in Matic if you hold one of these NFTs. So to wrap everything up, if this is something that interests you where there's no Ponzi-nomics, they are actually investing the initial capital, paying out a dividend on a monthly basis, and reinvesting 45% of those profits in those said strategies. If that is something that you're interested in, well, you still have time to join the whitelist, and the minting commences on June 10th, which is in about 2 days or so. And as I said, it is $500 worth of Matic in order to buy one of these NFTs, and it is transferable and you can sell it via a secondary market when the time comes. Now, if you're not too sure whether or not you want to invest in this project, well, I've actually partnered up with Wolfer Finance. We are giving away one NFT on June 10th. So we're going to be giving away basically $500 worth for this one NFT, which is going to allow you to get passive income on a monthly basis based on their strategies and their investments. So if that is something that you're interested in, then definitely come on over to my Twitter, retweet this, follow Wolfer Finance and myself, like it, tag 2 friends, reply Wolf for a chance to be selected as a winner on June 10th when this starts minting. So with all that being said, that's basically Wolfer Finance in a nutshell. If you have any questions, definitely join their Discord, follow them on Twitter, ask anything in the comment section below. I am going to be minting one of these just to see how it goes. Of course, it's not financial advice, but if you guys enjoyed the video, smash the like button, subscribe to the channel if you're new, and I'll catch you guys in my next video. Peace.